Okay, how you going there, guys? Not too many on at the moment, so it looks like we're having a few little probs, but just let me know if you can hear me loud and clear. And then we'll get kicking away. Should have my internet all sorted, so we're going through. Gotcha. How you going there? Now we're coming through clear. Just let me know if there's any buffering. We're just sort of making sure that everything's going sweet and we're getting everything up and clear. Yeah, so I'm on the hotspot now, so you wouldn't believe how much better the hotspot is than the ADSL2. So going through the 4G network, it's really nice. All right. Welcome, guys. Welcome to TradeSetup and the live stream. It's the, what are we doing, 30th. So crack along the end of November and give us a few more days and blink a couple of times and it's Christmas. So I hope we're all sort of winding down. I'm guessing we're a few of us are just winding down coming into Chrissy. Just as you asked, the question had some buffering. That's a bit of a bummer. Yeah, I'll keep an eye on it. I think hopefully we should good. Let me just minimize that. I'm just keeping an eye on the upload speed. Better than ever, that's great. Now look, I think this is the way to go. We're just going to be going through, so we shouldn't be having any problems going forward. The only problem we'll have is if I can set everything up in time. Thursday's a bit of a busy day, so. All right, like I said, welcome to TradeSetup. Anyone that's new or watches this later on, just see us on the top left-hand corner, you'll see our Twitter feed. Now we'll be, like I said, we'll be active on Twitter. We've been getting a bit more active. And just things that we're linked into that we find of interest, we will forward it on or just retweet it so you guys can have a bit of a read if you don't already, if it's not something you're already linked into. Top right is Facebook, and the bottom right, the important one, is linking into us on YouTube. So you will get a notice every time we go live. Every time we upload it or start a new stream, we go live, you'll actually get one from YouTube as well, just to make sure that everyone knows that we're up and running. What we're going to do too, we're going to start getting into, obviously be pushing more of the streams online and doing more sort of educational based talks. I know we do talk a bit about stuff in the live stream, and I'm going to go over something today I think could be interesting. Well, it's more about what we do with our alerts and how we look at them and how we enter and exit and just your bits and pieces, with risk mainly because, well, everyone should agree that risk is the most important thing. And I'll just talk about how we sort of see our risk and how people, because we've had a couple of questions of late, new clients just asking about where we put our risk. Is it below the candle, below this, below that? Dollar risk, so we'll just go through that a bit. So what we'll do with the YouTube is do a few talks, free to everyone, so let anyone know that you think might be interested in trading, that hopefully you think we're doing all right. We like to think that we analyse it in a certain way that's quite, there's no bells and whistles behind it. It's more of theory, well, reasons why we're looking at it is a bit different to most people, you'd say. It's not indicator based as such. We do look at a couple of indicators, but it's more just got to do with, where you see evidence of buy demand and sell demand, and, you sort of supply demand. I mean, supply demand pretty much governs everything, I think. And it does too in the markets. It's not so much, like I said, indicator based when your moving average is moving up, they cross over, you buy, all that sort of stuff. I'm not a big believer in that. I think it's a secondary. Everything like that's secondary. So what we'll do is a bit more education on how we look at things and do some more talks going forward. So I hope that's going to be beneficial to everyone. Well, let's kick it off today. Not much overnight. I mean, the Dow was up about 100 points. I think the Dow index, not the futures, the index finished up about 100 points, whereas the broader market, the S&P 500, was down a point or so at the close. A bit of a strange one to see them, even though the S&P is not down a lot. It is quite strange to see them heading, especially when the Dow is up 100 points, significantly in the other direction. So I think a lot of it was sort of rotation out of, the NASDAQ I don't think did too well. I don't know what that finished at. The NASDAQ, but the tech stocks, they're sort of rotating out of the tech stocks and heading into banks because I think going forward, there's all the yield or what you can get out of banks the prospects going forward are a lot higher than, say, the tech that have been really driving this rally the last, I don't know, year or so or more. So yeah, I think that's what was happening over there. So the banks did quite well. The banking sector sort of led the charge, well, in the Dow anyway. As the potential for interest rate rises is, you know, some inflationary numbers come out of the US, which is quite positive, which sort of adds to the pressure for interest rate rises. And we had Yellen come out and say, have you got your video on? No. Yes. It is streaming through, isn't it, guys? Oh, sorry, the picture's still there. I haven't... Well, let's click it over now. Let's just delete that. There you go. You'll get it in a second. So it should come through there, guys. Just let me know. There you go. Yeah, so Yellen was talking about, she was just sort of reiterating that inflationary pressure is starting to edge higher, and you know, they are pretty much gearing up for more interest rate rises, and I think their numbers, where am I? Their numbers have sort of the top end of the range, even, you know, 2 to 3% on CPI. They're looking towards it to be stable below there, or between there. You know, you're not worrying about inflation dropping off. You're not worried about going up. That's a stable sort of a 2 to 3% range. When it hits up above, you know, the top end of the range, that's when they look at raising rates, and that's where it's getting to now. So it's sort of, before it was a touch under, but it's just the pressure's been increasing, and the numbers they're seeing is increasing. So yeah, so that's a good point, and that's what they're seeing with the banks. You know, the banks raising interest rates is always good for their underlying dollar. They haven't performed as well as, you say, the tech stocks and a few other things that's really putting the shine on them. So yeah, the FTSE was down. That was down about 80 points. I think that underperformed the market. I think they got a bit of pressure from, obviously, the Dow, not the Dow, the pound. The pound rallying was putting a bit of pressure on the stocks that are based overseas, that are on the FTSE. So it's putting a bit of pressure on there. So that's why you got a bit of a sell-off there. And then obviously you got Brexit issues. They're still, they're edging towards a deal between Britain and the EU. So I think that's going to be good for the currency so much, but who knows how it's going to play out for stocks at the moment until, you know, the terms are really nutted out, I think, a lot better. On the DAX, yeah, they're just kicking along all right. So all good in that respect. So our market, yeah, got hammered on the open a bit, which I was more surprised than anything else. We're down 32 at the moment. I was expecting more of, you know, down 15 to 20 or so, looking at the SPY futures and what they did overnight. But instead, they got belted around a bit. So I think we're down 50 or so at one stage. So we bounced back a bit. Let's just look at it. What are we, XJO? So it did get rejected a bit. It's going to be, by looking at sort of what we're seeing there, that you probably expect a bit of chop with the way the market's reacting to different things. You know, it's just when the bears come out, they really come out, and a lot of the times I think it's played that way. The bigger boys are playing it that way a bit. Yeah, they drive the futures down on the open, and then it's sort of all day they spend edging higher, and then overnight it edges higher, and they sort of do the same thing because they know that people, you know, what do they say? The retail traders open the market and the professionals close it, so they tend to play around with the retail, you know, muck around on the open, and then they sort of pick a direction. This thing could just easily keep edging higher. And you see, we may be on the ASX, we've had this good powerful move up through 6,000. We backed off and we started, now we're edging higher. So this is not as clear cut as, say, a move up like this. It's a bit more like this, so where it consolidated around 5,900, slowly edging higher, and then it pounced through 6,000, just sort of spiked up through there. We backed off quite quick, and we may be doing the same thing. We may have some higher lows holding, then boom, straight up through 60, 50 and up and onwards. We'll have to see how it plays out. Or this could just turn in and take out these lows, turn into a deeper correction, more of a macro correction. meaning we've had a good strong leg up. We need to wash out more players, put them back on the sidelines just for fuel, and then make more of a major high low, whether it's 58, 58.50 or sort of, you know, that 5900 zone. If that's the case, wash out this low, wash it out, and then start building from there, a new, stronger, longer term leg up. But we'll see. I mean, we can't do much but really just trade what we see at the moment. With respect to our, or with regards to what we've got going, what we've got up and running, so far so good. We've got MGE, which is it's an alert we've had for a while. I think it was 280. We bought that up at 280 just when it started basing through there, and that was, if you're looking at the weekly chart, I wish we could just stick with that. The weekly chart, you can see that's a good opportunity for it. It was a good zone for a high low, and we just figured if it break out through there, then this could be a new good leg up, and it's proving to be that at the moment. And until the US rolls over quite significantly, I think this is just going to keep grinding higher. But we want to, at the moment, we've taken a partial on this, and we're just happy to keep raising, because you can see the history of this sort of stock. It doesn't have a big pullback. So things like this, you have a couple of legs up, you've got a few red candles there, but really it was holding around the same level. Even just up at here, you had that one green candle, then you had a couple of reds, just consolidating, didn't really pull back that far. You can easily raise your stop. It's quite clear. Even, I think we've got it somewhere below $3. I might have to raise it, but I've got a feeling it could be around 294 at the moment. We might just lift it, say 298, for example. We might be looking at doing that just to lock in on the second half, because look, I think if it pulls back, it's going to have a decent enough correction, and then we'd rather be out on the sidelines and reassess it. But so far so good. RMD, that's a good one. That's looking a bit top heavy at the moment, but then again, look at this little move down. So you can see when it's had a good powerful move up, it's had a bit of a pullback, built that high low. That was when it was a bit choppy, and it's been a bit more contained, a bit more controlled, this move up recently. And you can see it sort of went into overextended territory on the way up, got up to through 1125, and this back off, this, we're just a bit of a pullback here. It's quite some strong selling, but it was been soaked up quite well. So if you flick it back to the weekly chart, it's starting to get extended. It's not particularly going to roll over just yet. There could be a lot more to go, we don't know. And I was just looking at it before. If we take it sort of the lows to high here, 5 to 10, and you add, so it's about a $5 rally there on the weeklies. Take it from 7, that would take you up to 12. So it could still have another 50, 75 cents in this. So we're just going to keep an eye on it. Again, this is one that I'm happy to keep it fairly tight, because if it does roll over, especially if it takes out this little low, it could just contract. It could go bang, but I'm expecting that. It's starting to look a bit heavy up here. You know, if it can't get through these highs soon or quickly, I'd rather be out and reassessing it, you know, and just booking those gains. Especially we've got a few positions on now. I think we've got up to 8. CKF, anyone that's been following that with me, it's been a bit of a banter, but back and forth with Davin and I. Paul, how are you, mate? Just to answer your question there, Paul, when I say that it's been soaked up, where am I? What I'm saying is that you're sort of looking at these pullbacks. This pullback is deeper, and you see the pressure on the stochastics has gone from, you know, up towards 100 down to about 50. Now this pullback here is similar. So we're looking at the stochastics more as pressure. The deeper it goes towards from overbought to oversold, I sort of interpret that as being the pressure of the selling. Now when it's heading down to oversold territory, that's quite strong pressure. But if you correlate that to the actual pullback, and the pullback's not very significant, then, you know, you like to say that it's been soaked up. The pressure from sellers has been soaked up by the buyers. They're stepping in, rather than staying on the sidelines and just watch it pull back. Does that make sense? Hope that makes sense anyway. So that's what we're looking at, and you know, the same sort of thing in the reverse. Look, for instance, just here. If we go back to, actually, this spot here, when, you know, back towards the end of September, that was a good sell-off, and you're sort of looking at the move up here. It was quite heavy from oversold to overbought. It moved up quite hard, and it come all the way back down. got back down to oversold, and that was quite a good pullback. That's quite strong. Now when it started edging higher here, and then you've got this little correction here from overbought to oversold back down here, you can see that pressure was on. The pressure was quite strong, but this low is nowhere, we're nowhere near $9. So it sort of fell short. So that's saying that buyers are starting to step in force. The MAs are up. There's a few things like that we're looking at. And when that happens, and you can see that the selling pressure is quite high, they're giving it a good nudge, and it's just holding up. You'd interpret that to say that the buyers are quite strong. The buyers are starting to win the battle, and that's the way we're interpreting it. And that way, you know that there's potentially some buyers stepping in here, and it played out that way. And that's what we're looking at the stage when we actually bought into it. A touch below $10. I think it was 9.94 on this one. And then you can see this little rush up. That's you're pretty much proving your point there when you get this gap up and it's busted straight up through $11. That's obviously, we know who's in control now, and that's pretty obvious. And then you get this little pullback, pullback to around 50%, and a lot of times they do that, have a pullback. It's good selling. The stochastics will pull back. That pullback is, it's not a big one, but in comparison to this, it's only 2 candles or so. That's next to nothing compared to that pullback. Yet the pressure has been sort of quite steady and quite strong from the sellers, but it's been absorbed. So that leads me to believe that it may have a breakout and take out to the top. So if anyone's shorting this, for instance, if you're just entering the market and going short, you'd expect them to be flushed back out of the market when it takes out those highs, because ideally they'd have their stops above the high. If people have sold a long position, maybe they bought in here and they sold that, and that's why we're getting that little move, they may look to re-enter on that break up through the top. So there's any number of reasons why people enter or exit the markets, but that's just, that's why I like to interpret things. I hope that helps. CKF we've gone through, yeah. So Paul, you know this one. CKF, and if Davin's listening, I'd just like to let you know, mate, I'm back in the game. If anyone was watching this, we saw a couple of good days, and then they had I thought it was quite a positive, fairly decent report yesterday. They're kicking goals. Whether their dividend didn't quite match the expectations of the market, it was 8 cents, and I think it was 8 cents previously. Maybe that's why they got knocked about a bit. Who knows? But really, they're putting on more. They're making more money. The results are quite good. They're improving. They're doing all the right things. So it was I thought it was quite a good little release, unless it was buy the rumor, sell the fact kind of thing. Okay, that's fair enough. But it's bounced back today, which is good. I'd like to see that, and I'd like to see if it can just punch up towards, just pop out through those highs at 6:30 or so, just so I can get that 6-pack anyway. I think it's a slow moving stochastic there, Paul. It's 11-day anyway. Stochastic, smooth, full stochastic. It doesn't really say. There's different ones. It's got down that really it's the amount of days you put into it. You can pick and choose how many days you want to use for the data. I'd pick normally around 11, anywhere from 11 to 14. I think 14 is standard. So yeah, that's CKF. SAR, okay, that's kicking along. Once we got in 150, it was back here. It had a couple of days of pressure there, but it's built that higher low just above 145, probably about 146 or so. Looking good, and this little spike up through. I mean, I'd like to see a bit more strength, so we may be, I can't remember where I've got my stop at the moment. I'm thinking about just popping it up about 145, maybe. It might be there now. Let me just see. No, I can't see it. I'm pretty sure. If not, we might just look at tightening that up. Purely because I would have thought that I've got up here with a bit more strength, a bit more conviction. It's just sort of grinding high. A lot of times you get these grindy markets. They grind high, and they bang, a good washout, and that sudden move down, wash out a lot of people, and then start going higher again. Just don't want to get caught in that. But look, ideally that graph is looking great. Sorry, that chart's looking really nice. A good push up, a good pullback. That's about a 50% retracement of that move up, or probably a bit more. And then you can see the high low building here, and then we've just been edging higher, grinding higher. So that's quite nice. That could just keep going up, and you'd think it would start to accelerate. So maybe accelerate up to those highs, or at least 170 or thereabouts, just to put us in a bit more profit. But again, we'll just wait and see. We've got SGM, which is a bit of a bugger at the moment. I thought we've pretty much got in that, flushed us, pretty much stopped us in at 1450. Bit of a wash out of those previous highs, and it's been backing off, but it's still, look, it's still got the potential to hold those higher lows. It's just today, which it edged below 1486. We got it at 1360, I think. 80, 1380 is our stop. So look, I'm hoping that can hold in there and just push back up to through 1450 and up towards 15. I mean, that chart doesn't look bad at all, and the weekly chart's looking good. It's just a bit of rejection up there, which is making me a bit think about it a bit more. But anyway, that's Sims. FWD hammered today. Don't know why. But either way, we're still in that. It's pretty much back to break even for us there. Yeah, probably because what we're seeing there, we've seen the market get a bit ahead of itself on the daily. The weekly looks great, and I like this move down. You've got this one move down, a pop up, just washed out the lower high here, and then roll over, and that was a big flush out. So of this move up, so big flush out of some late buys. Then we've got a higher low in here, and this little pop up. So that's a positive sign. Just want to see if we can consolidate above 280 and start, you know, pushing back up again and hold a higher low. That's the idea on this one. We'll just see. It's had some news out. AGM, they always throw them up, don't they? ECX, Econex, yeah, again, not the greatest of days for us, but that's just a bit below entry. After that good pop up there, I mean, again, the charts, that weekly chart's looking strong. No doubt about it. You can see that big push up. A good pullback, washed out a lot of these buys, you know, a lot of these long positions, washed them out, held a higher low, and that was a good part of a few months through here, 3 or 4 months. A lot of work done in there with buyers pushing the support. Then we got this leg up, pull back, another leg up. So I'm expecting this to be just to continue on. Again, just have to wait and see. LVH, that's got into that one, I think it was yesterday. Kicking along nicely, 102.5. They had some good news yesterday, and that's kicking along. It touched on 110 today. I'm expecting that to drive through 115 and just keep ticking up, looking good. So that's pretty much it for us. I think we've got one other that we're waiting for at the moment, but it hasn't ticked off yet. It's actually backed off a bit today. So look, we'll see how it goes. Any questions there, guys? I'm just going to get something up. If I can find my mouse, I've just got to keep looking where my mouse nicks off to. All right. What I want to do now is just talk a bit about, we've had a couple of things, people chat, we get a bit more exposure now, we're putting a bit more effort into the marketing side. We really haven't done too much, it's been more word of mouth. So again, thank you very much for that word of mouth there, guys, and continue it. It can only help us and help everyone, I guess. But with our trade setup, we've got a few people coming through, and you get similar types of questions. I think it's a traditional, and this is what sort of differs between what we're looking at, or the way we look at the market and entries and exits. And I'm not saying what sets us apart, but why we look at supply and demand, and why we sort of like to term it as supply and demand, and the way we view it. Your traditional entries, entries can be similar, but some people enter on the top of yesterday's candle. If it breaks through the yesterday's high, if it does this, even they place their stop 2 candles back. All this sorts of stuff, and I'm not a big believer in that, because I think trading it that way, you can easily get days where the market's got to flush people out, and we've spoken about this quite a bit. So the idea behind that, or the theory behind the market, if it's edging higher, you can only go so far, but it has to do a bit of a washout, or we're going to have a complete correction. But when the market's trending, it never trends in a straight line up, and it's nice and easy for everyone. It's always going to pop up, wash the late traders back out again, put them back on the sidelines, and then build a high low. Your next phase of buyers look to buy into it, and so on. So everyone's got different trading styles. The market's made up of many, many people in that respect. Your entries, your way you enter, the way you exit, and things like that. So that's why the market's beautiful, I guess. That's why it's fun and it's interesting. It's a big challenge. So the way we look at it, we want to put ourselves in an area when we talk about risk. in an area where we have to be proven wrong. And we've spoken about this, like I said, the market is going to go up. And it's always going to, when it's trending, it's going to go high and low. It's going to go higher highs, higher lows, higher high, higher low, and so on until you get a more of a macro correction. You get a deeper correction there, get a lower high, and then you get more of a macro correction. And that's what we've spoken about before. You know, then it resumes the trend again. And this is what the market will do time and time again. All right, so when we enter, you can either, I'm always looking for, I like seeing this, you know, if I catch a trend, you can see a trend up on the weekly, for instance, and then it's gone into a macro phase. I like to look for, I mean, as you all know, by listening and what we've spoken about in the past, I like to look for that higher low to work off, because for me, that's your next phase, you know, your next leg up, and we want to take advantage. We want to be nice and early when it's more, the outcome is unknown, and we want to be buying and then eventually selling into these people who get in a bit late, you know, because they might need a lot more confirmation. Everyone's got different risk tolerance. You know, my risk tolerance, I'm happy to jump in here and take some smaller risk off, you know, just by utilizing a different type of setup, or, you know, the way I look at my setups, minimize my risk, and then hopefully I'm at the right stage where we're in the next leg up, the next phase, the next, you know, up leg, the next expansion phase, I guess, of the market. And like I said, you want to be selling when, you know, it gets to here, then you get this lower high again. You want to be selling to people who might be buying it in here. You know, the euphoria, for whatever reason they're doing it, we want to be selling when we, you know, there's a good chance that that leg is starting to come to an end. And then you can always reassess it. And that's, so you're taking chunks out of the market. You're not trying to, you can, I mean, longer term traders can buy it here, ride it through this sort of a pullback, and then sell it, maybe sell up here, or just ride through those bigger, longer term, and then looking for those longer term moves up. That's great. I always take the, you know, take the view, I'm trying to take a chunk out here, and then you get that pullback. I'd rather be out, and if it goes again, I'll be back in. And because there's always a chance that it rolls over, where it just doesn't do that, and it can go sideways from here and do nothing for the next 2 years, and I'm out of the market, I've reassessed it, nothing's happening. Whereas you get your longer term buyer has to sit through that, your longer term, where the market's doing absolutely nothing and their returns are going nowhere. So I'd rather be out and reassessing it now. If it doesn't happen, or if I miss this, it doesn't matter, because I'm trying to do the same thing, I'm just looking for a different stock. So we're trying to take the chunks out of the market here and there, and trying to be, you want to spend as little time in a stock that's doing nothing as possible, and that's the aim of the game, I guess. If it's sitting there doing nothing for a while and you're in there, that money could be better used elsewhere. And that's why, you know, that's sort of our idea behind trading. I've probably got a bit sidetracked there. And there's ways, you know, to enter. You can look for a continuation. You just got to know what phase of the market you're in. You got to know what's happening. You're getting a bit extended in this leg. If you're buying up here, you know, on probably a breakout here. You know, you've had 1, 2, you're looking for that third leg. Is this getting towards the end of that leg up? Are we going to go into more of a macro correction and see this type of price action? You've got to know exactly where your risk is. All right. So for us, what I was talking about, our risk is, it's always below a swing level, a higher low or something like that, because basically the market has to come and prove us wrong. And we always want to be proven wrong. You don't want to get out of a market. I'm trying to not word this, but just try to explain it a bit differently. So if that's essentially where our stop would be, we enter at this blue line. So this is our entry. This is where we would place it. Now, other people have got, you know, for whatever reason, they may place their risk differently. And this is where I think it's very important. Where you place your risk and where you place your exits is a very important part of trading. And after speaking to a few people on the phone, I sort of forgot about it for a while because I haven't spoken to too many people about it. And I know in the past, and you read in books, it's all the same type of stuff. You know, it's all spruiked in you know, technical analysis 101 is, you know, a couple of candlebacks. If you're buying on the daily candle, you know, you buy the previous day's high, you buy through the previous day's high, you know, okay, if that works. But then you put your stop below the previous day's low. Now, I think things like that, and having, for example, a dollar stop, I'm only going to risk, say, $500 on this trade. Now, if that puts you above this higher low, there's no reason why you can't be completely right on the trade and be stopped out in the same, you know, at the same time. You can see that the market, so I mean, we've all seen it before, the market gets choppy. It can pop down, retest this low, stop you out in the meantime because you've either got a dollar risk and that dollar risk is not putting you below a key level, or you've got it just below, you know, you looking at candles, and you know, you've got it 2 days back, you've got it below the low of the day of that day, but it's actually above this higher low. Is that making sense, guys, what I'm trying to say? I got something that moves. Yeah, look, that's Nando. I think you want, like you're saying, I think or what you're getting at, what it sounds like you're getting at, is you want to be in something that's active. You want to be taking advantage of moves. You don't want to be mucking around in the market. And look, all honesty, I've got a couple of stocks myself now that are doing nothing. They've done nothing for probably a year. They're not worth much. And the potential is, with that style of trading, what I'm looking at is more when they go, it takes them about, you know, a week to just rock it up, and they can actually do quite well. You know, but I haven't been focused too much on it, so it's just one of those little. It's not the bulkier trading. It's not the, you know, the bulkier portfolio. It's just a little punt, I guess. But yeah, so is this making sense from what I was trying to explain? If you've got your candles here and then your next daily candles here, so in essence, what people may be doing is going, oh look, I'll buy in a break of that candle. I didn't even change color. And you buy on the break when it goes through, and then your risk could be below this candle. But your higher low, if we're getting at it, has come down here. All right, and as we're going up, so you've got your risk here below that low of the daily candle, whereas your swing low is down here. This is where you're going to be proven wrong. You're not going to be proven wrong if you get stopped out there. Does that make sense? And for me, that's a very important part of trading, is where you place your risk. And again, you want it to be in an area where you're proven wrong and your thesis is wrong. So that way, you're out, you reassess, let the market do what it's going to do. You'd rather be on the sidelines if you don't know what's going on. But if you get a clear picture of what's happening, okay, that's when you push it a bit and you really try to get at it as much as that trade as you can. And again, when we talk about a dollar risk, with our alerts, what I was trying to tell people too is we don't particularly. We have our portfolio of our model results are based on a $10,000 position. Now, we're still risking off a percentage. So some of those times we've taken a bit of a hit on a stock have been, the percentage has been quite large. Now, it doesn't necessarily mean you trade it like that. Maybe you wouldn't trade 10 grand, or your risk would be a lot smaller. So you're doing a smaller position, because if you're going to take it, base your risk, where you place your stop around a risk, you want it to be, say for example, if that's a $500 risk between there and there, you want to stretch it out, do less shares, risk your $500 still, but be able to place your stop or your exit below that low. So where you're proven wrong again. That way you can muck around and then, you just rock it up. You're still in the market. You're not getting washed out of the market. Okay, your profits might not be as large. But then this all goes back to, it goes right back to how you enter and and this is why we like to go down to the different time frames. Have a look at the lower time frames to see what's happening, because you can still risk it, because one time frame flows into the other. And you can still you can actually minimize your risk by still having the same sort of payout, if that makes sense. So if you generally like watching it, this is your weekly trend. Your weekly's gone up, your weekly's correcting, and it's gone up again. Go to your daily here. If you see the weekly start, it's popped out, and it looks like it could be a nice little zone somewhere at this stage, a nice zone to buy into. You're looking for that higher low. Go down to your daily, and that's where your daily is going to potentially give you a lot better risk. I mean, this here, that could be something like this, and then the move up. So you're putting your risk, you're minimizing your risk a hell of a lot. It could be looking like it's above the major high low, but it's actually above a daily high low. So that's a strong technical pattern, and this here is this move down. Does that make sense? So that move down could be split up on the daily and a few legs down, 1, 2, and then it starts holding a higher low on the daily. Then you buy into your risk. So you're really front running that push up before it breaks out of the weekly high through there. Does that make sense? I hope that's making sense, guys, but I thought I'd just chat about that. I think it's really important where you place your risk, and how you trade and how you sort of plan out your trades. But ideally, what I'm talking about here is how we sort of base everything. This is how, in a nutshell, what we're looking for. You know, you'd hate to see something you buy in here and you get a dollar value, or you trade it like this, you know, below the low of a daily candle, you know, your previous day's candle, however you do it, and then you'd hate to see this happen, get stopped out and just watch this happen from the sidelines. Nothing worse than that. And when you were completely right about the trade, all the work you've done, all the planning, and then your where you place your risk is just getting you chipped out of the market. And if that's always going to affect your longer term stats as well. Of course, there's going to be times when you get chipped out and it keeps rolling over, and you could have minimised your risk a bit. But I think it's going to sort of, in the longer term, it's going to play out in your favour to have it below higher lows and lower your risk and just change your risk around. Anyway, it's a good chance I'm going to get a phone call in a minute, so I'll just mute that. So if I drop out, guys, if the phone call does come through and I drop out, it should pop straight back in, okay? But anyway, let's get into it now. So if there's any questions on that, feel free to chuck them into chat. Otherwise, feel free to put into chat anything that you want to take a quick look at. Now we dropped out with that phone call, so that's good thing to know. Alrighty, anything you want to look at there? I'm just trying to think of anything we've got on the go, if there's something we're keeping an eye on. Oh, here we go, look at this one, LVH, that's kicking on nicely above 110 now. So what do we get, 102.5, up a few percent, we'll probably go up about 8, 9, 10% now. I think this one's a cracker. Look, it's not a major trader, but it's picking up in volume. Well, not really. You can see a bit good volume here as it's rallying up, and this little sell-off here. You can see the sell volume coming quite heavy, and it's starting to flow back in again if we can get a pickup in volume, especially when it gets through those highs. If you see an increase in volume, that'd be nice. That's just your different style of trading, you know, buying on a breakout. Okay, what's that? So I found a nice little calculator to determine a CFD purchase price with a dollar risk amount, and it tells you how many CFD shares to buy. Oh, that's good. So anyone just look in the App Store, is that Apple App Store, or is that, I'm guessing, both, Android as well? It's easy enough to do, I guess. CFD ETF risk calculator, that's good. I like that, thanks COOPA. Stream in the hand, you can also use a spreadsheet with calculations, oh, that's good. Yeah, Paul, so what I think this is like I'd like to say, the art of trading. Let me go back to it. I just want to go back. So Paul's question is very relevant, I think, anyway. What we're saying, say, if this is the weekly chart and we've seen this spend a couple of months correcting lower, and we do this a lot. If you get intraday traders, they're not, you're trading on the 1 minute chart, but your entries are not based off a 1 minute chart. They could be based off a 5, 10, 15, half an hour chart. But what you're trying to do by going down the lower time frames is refine your entry. Now, this setup here, what we're saying, we're buying off a high low. It works the same. So you can break this leg down. So this pullback on the weekly to build the high low, you can break it down. And on the daily, it might look like this. It might go down, up a couple of days, down a few days, and then start building a high low on the daily. So that's the same setup on the daily basis as what the reason why we're buying on the weekly. Does that make sense? So all we're taking the advantage to do here is just refine that entry. Okay, and we're getting it's the same criteria as what we're seeing. The reason why we want to buy into the stock for the weekly move up, potentially being the start of a strong leg up, we're buying it on the daily. And the daily might go up, get overextended on the daily, pull back, you know, with the stochastics, the buying pressure is quite high, then they come out of the market, then it builds a higher low and goes all for that leg up, and then you have a deeper move back. So that this move back on a weekly might be like this on a daily, you know, a couple of legs on a daily. And then that's made up on a daily, well, that's not very good, is it? Like this, you know, 3 legs up potentially. It's your ABC pattern or your Fibonacci stuff or whatever you call it. And then we get this type of thing again on the weekly, looking at the daily. So what the daily gives you the opportunity to do is just refine your risk, but you're taking it off strong technical patterns, strong patterns, proven patterns. And this, like we say, this is a pattern that's showing evidence that buyers are stepping into the market higher, especially when what we just spoke about before, when the stochastics line up too. You see the stochastics on the daily, it's getting oversold here, and then it's oversold, but that's a higher low. It means that buyers are stepping in earlier. They're happy to step in early. They want to support this stock, you know, they want to be part of it. And they're starting to really soak up that selling pressure on the daily basis. And that's where you potentially get that turn on your weekly, and then up she goes. I hope that makes sense. Yeah, it's all about risk there, Paul, all about risk. Yeah, look, Nando, I just read your comment then, mate. I had a big, still have the issue occasionally of selling too early, getting out. Look what we did on CAN a while ago. We got out at 2, it went to $3 something. So don't tell me I banged my head against the wall a few times after that. And there was something else. Well, I can't remember now. But then again, if you look at, when we go and look at, let's just get rid of this, APT. There's times when it works for you and there's times when it doesn't. But you've got APT was a good example of knowing where our risk was. Our risk was just below here. I think we got washed out here. And in essence, what I was thinking, if we get washed out, stopped out through here at 525, you know, we've had this little pop up, a pullback, a pop up. Doesn't look too strong. That move doesn't look too strong. So I figure if we get stopped out here, it's probably not a bad point, especially after we've had 1, 2, nearly 3 good legs up of the longer term trend of the weekly. So that's your daily, and that's 1 leg up on the weekly chart, but it's made up, broken down to 3, say, on the daily. So when you're getting towards, potentially, if at this stage you're looking at it, okay, we're more than likely, probability is we're getting towards the end of this leg up. If I get taken out here, there's a good chance we're going to see that lower high. And it's all about probability, and it's all about knowing where your risk is and all that sort of stuff. And like I said, that's kept us out of this little move back. We'll have to see how it goes. This might build now, and if we can get that higher low, a clear, distinguished higher low, then this to me is a good flush out, and we can start spending some time building for the next leg up. And that next phase, or that next major leg up, could take us through, you know, $7 or $8. So as long as we know where our risk is on any one trade, there's times when you're going to get chipped out and it's just going to go on without you, but there's more often than not, if you know where the risk is and you know how to place your risk, if you learn how to place your risk better, I think more often than not, it's gonna help you and it's going to improve your stats. And it's all about, again, trading is just probability, and it's all about your stats, all that sort of stuff. So I think it's a very important part. Here's my little rant anyway, guys. Nando, Eve and APX. Let's get into that now. Let's go to this one here. Sorry, just finishing the coffee. Very important. Eve, mate, you got some nice ones there. That's Eve Investment, EVE. You can see that if I'm hoping that everyone else, you know, sees a similar type of thing. There's characteristics of this movement. Okay, let's just draw it up without really even bothering. I hope everyone's got that. It'll be on the stream anyway. Characteristics of this move that we like. Light blue. So you get that pop up, pull back, retest the lows, you get a lower high, and then you've got this move down. You know, then it's popped up again, another move down. So you can see that it's quite consistent, and you get this little washout. And then through here, it held a higher low, then boom, it went up. So what we've done is just sort of broken our way out of this move down. You know, your lower lows, your lower highs, lower lows, until something's happened, something's triggered at the start of the month, boom, straight up to 1.4 cents. With that, you've got this increase of volume. So obviously the buyers are well and truly in control. So just glancing at that, maybe it's extended. So we have to go back to get the bigger picture view where we're at. Just 1 second there, guys. Sorry guys, just be 1 moment. All right. Sorry guys, just gonna fix something here. All right. Just got a sneaky, there we go. Off you go. All right. So I forgot where I was at. So yeah, by just looking at this one here, by glancing at what we see here, you want to go and see, obviously, next step. After you see this, you go, okay, this is broken out. There's been good news, good fundamentals behind it. What's going on? What's happening in the bigger picture? So you just basically, from here, I'd always take a step back, see what we're seeing in the weekly, and you can see that, okay, this is actually looking quite good to me. What we've got is spent a lot of time, 2013 when it started pushed back down to those lows, spent a lot of time holding, started lifting up a bit, started lifting up, and then we backed off, and that's what we just looked at in the daily. It just backed off here, and then we found lows again, and it bang, just accelerated higher. So I'm not sure what that high correlates to. High of 1.5. It's probably 1.52. There you go, high of 1.5. So we're just coming to a bit of resistance here, and that's from a weekly perspective way back in here. So it'd be interesting to see how it goes, whether we do. But look at the volume increase here on the last few weeks compared to what happened here. Not much happened here, and it was a bit of on the back of thin air more than anything. And that's been flushed back out of the market. And then we've got not only the buyers being flushed out, we've got a whole bout of new buying coming. And you can see that by the increase in volume. So there's good pressure, really kicked it higher. So from here, what I'd potentially be looking for is that bit of a pullback. Maybe I'd like to see it punch through 1.5 and then pull back and build a higher low and then go again and really start that weekly move up. And I want to be part of that, maybe another leg, because generally things like this where they spent a lot of time down here, they can pop up. And if you can get it, look, if you get a hold of it here, it's more luck than anything else, I believe. But then when you get, if that pops up through that 1.5, say, and then it pulls back to build a higher low, I think you're going to get a whole wave of buying come into the market then. And then that leg up, the second leg up will be, probably 3 times the size of the first leg up, if that makes sense. And then you might get your run up to, 10 cents, for example. So I think there could be a lot in this one anyway. But definitely it's on the right track. What was the other one? APX. So I just read your comment about APT. True. Back in the zone. We'll have a look at that in a second. Nice, Nendo. What's that one? Open. I was actually looking. Oh, geez. Oh, lucky I didn't put a buy recommendation on this one. I was looking at buying that potentially through 6. I think it looked quite good, but as buyers go, and this is another thing, guys, if you're going to, and this is the hardest thing with trading styles and how you trade. If things like this, you don't want to be buying on stop, and this is what happens when you buy through a level, buying on stop. You got to realise that things like this can happen. It's gapped up on the open, good news, gapped up to 7. So if you bought on a pure stop through 6, you didn't get a chance, and you bought it on the open, you're up a bit at the moment. 7.05, so you're up 15 or so cents, but you'd expect that to be a bit of selling pressure, a bit of anyone who's bought it through here to start booking some gains if it sort of struggles here. I mean, if it keeps going, good, and you bought it at 7.05 with a stop order, then it's all good. But if it does start backing off and you get it all the way down to 6, where's your risk going to be? Where is your risk going to be? Your risk has to be down towards that 550 mark. Now that's too much risk for me. So if you ever just think about it when you're using a stop. Just watch your orders on the opens. You know exactly where you are. If you can put in a stop limit, stop is your entry price and your limit is what you're going to pay up to. So a stop at 6, a limit of 605, a stop limit of 605. You got a 5 cents window to get in, and if it opens up above that, your order's cancelled. So that's one way to just confine sort of the risk of a gap up on the open, or during the market, intraday, that's fine. You can always trade just with the stop, because you know it's probably generally, unless it goes into a trading halt, it's going to go through your price. All right, I have that a bit of sense there, but that looks good either way. Something good's happening there. I hope you're onto that one, Nando. It's definitely going up in the right direction. What they say today, successful completion of institutional placement. Okay, so that's a good thing to know. It's gapped up once it's completed. Anyway, all right, guys. What I'll look at now is what do we got? What do we got next? APT. We'll go. We'll just have a quick glance at APT. No, that didn't come out, did it? APT. I'll get my chart up. Yeah, so this one, I think what I'm expecting is that maybe to pop up, build a lower high, and I expect a deeper correction, because it's just had a good run. And before APT, it was, what was it? It was something else, and it was we were trading it up. We traded and got out somewhere above 3 from about 2 or something like that, and then we just had another dip at it on this move up here, I think it was, through here. So we've done quite well on it, and that's been going up for a while. It's been quite positive for a while, so I wouldn't mind. I'd expect that. Look, it's in it. It could be in a zone, like you said, but the one thing I don't like, and I'll draw it up, is that it's taken out a swing level. Now, you don't want to see that. The chance, you know, I've had to push up here, that's consolidation, that's your pullback, that's your, you know, and like you said, you can have higher lows form and lower highs where it squeezes in on itself and it starts holding, it starts breaking out the top. You got this leg up here, little pullback, leg up through the top, hit $6. What we've done is we pulled all the way back and we've just taken out this $5 mark. Does that make sense? So when you do this, you pull back, what I would be looking for, you've got this move up, this move up. At the moment, we're somewhere around here. What I'd essentially be looking at, maybe this happening, look, it's in a good zone on the daily. How come my colours don't change? I want a nicer colour. There we go. That's just... So what I'd ideally probably looking at is potentially that lower high to form, and then something like that, and maybe a deeper correction, just to wash out a lot more people, because it's different to when it holds up, and you know, if it does this type of thing and squeezes, it's holding the high low and then go. That's a different pattern to once it breaks through that sort of anchor level. Okay, I hope that makes sense there, but we'll see. What was the weekly show? There's not going to be much data on the weekly anyway. But it could be that, actually in the week, yeah, weekly, that's a bit of pressure starting to roll over. You can see the stochastics sort of getting apart. Could be some more selling coming to this one. Just keep an eye on it, but it could be, like, again, you could be right. Who knows? Who knows? It's all about your risk. I mean, if you don't know, all you can do is take a stab at it, and if it doesn't work, know exactly where your risk is when you're wrong. Never take a stab at it and leave an open end. GRB, group. All right. Oh, that's a lot better, I think. And the beauty of it is it's a Cage Roads brewing. You know, that's warranting a buy anyway, isn't it? What I do like about this, this could be ready to go, is the way I'm viewing it. Okay, we'll just go to the longer term. So we'll probably finish up on this one, guys, anyway. So just go. For me, do that, we'll do that, change the colour, and away we go. So we've had this big move down, pop up, good washout, and that's come down. And so what we've done, that's a big washout. You know, whether let me just have a look at the weekly quickly. Oh, that's a weekly. Yeah, we're back down to the lows. So on the weekly, you've had it's pretty much down on the lows again. All right, if we just go back to here, and what we had, so we had this little pop up here, and then we pulled back and retested that low, and then we started coming up again, and that's a really nice sign. But what you've actually done is made the lower high, so it's still squeezing into that level. What we've done here is made it's an ever so slightly on a weekly basis a higher low. That's a really nice sign. And then what we've just had this leg up here. So on the weekly, with this leg up, we've just taken out the last few, say 3 lower highs. That's a nice positive sign, and we're just going contracting on the daily now. So I think we're coming into a nice little zone, if I can find it, on the daily. That's your move up. This is washing out, but we're holding the high lows here. I've got my daughter here being a bit naughty. Say hi.
Hi.
Right, that's enough. Okay, so what we've got just here is that's a move up on the weekly, which is drove through those 3 lower highs, really brought in some buying power. And then at the moment we've had that pullback, pop up, retested that low, and we've just popped up to retest this high. So if we can here, and look, it's all ifs and buts, if we can hold the high low somewhere around 7, I think that's going to drag some more buyers in. We're going to break through 8, and up she goes through, at least get to 10 and above, and just really start put some pressure on those sellers. Or buyers just start pouring into the market looking for that move higher, because it's spent, and don't forget too, on the weekly, it's spent quite a bit of time doing nothing. What's that? Mid-2015, over 2 years now. Closer to 2.5 years, it's done nothing. It's just started picking up. So 2 years before it started kicking up higher. So a lot of doing nothing could lead us to some, a good little run higher. So I think this one is one to definitely keep an eye on. Nice one. Nice one. All right, let's, I think that's probably, we'll call it a day there, guys. Thanks very much for joining me. That worked out a lot cleaner, a lot easier on through the mobile there. So we'll continue on that way just to make sure that everything works nice and happy. All right. Yeah, thanks for joining me, guys. We're back in on Monday. Have a great weekend. Hope you enjoy yourself. And remember, if you do have any questions, feel free to send us an email to support@tradesetup.com.au if there's anything you want to ask, or if there's any charts. And remember, you can always, if you're happy, send in some charts that we can review. If you've got any questions, like just send in a chart, mark it up with what you're seeing, and then we can discuss it. And I can put it up, if you don't mind, I can put it up into the stream, and we can just go through a few things. And how we would interpret the buying power and the selling power, supply, demand, all that sort of stuff, and how you'd interpret, which way the market could be biased. But yeah, remember you can do that. So have a great weekend, guys. We'll see you again on Monday. Cheers. Bye.